Welcome to GEPL Capital Sunday Market Outlook video. I'm Sanket Bendre from Fundamental Research team, and in this video we will be discussing about one of the key news that happened in this week, that is GST 2.0, which is defined as the next generation transformation in the GST tax rate. So without any further ado, let's start out with this video. Let me share my screen and then we will start the video. I hope my screen is visible now. Okay. Okay, so in this slide, I have jotted down each and every sector's current tax slab rate for the GST. So in the automobile sector, as you can see, it is facing currently 28% plus cess for luxury goods in the automobile sector. Then in the clothing and apparel, we are seeing two rates for 5% for items lower than 1,000 and 12% for items above 1,000. Then essential goods is looking at 0 to 5%, hotels and restaurants 5 to 18%, insurance, financial, IT services 18%, packaged food and beverages is looking at 12%, whereas personal care and FMCG is looking at 18%, and tobacco, palm, masala, and alcohol is seeing 28% plus cess. So overall, this is the current tax slab rate which we are seeing as of 2025 under the GST tax regime. In this slide, I will discuss out like what exactly happened in the GST Council meet and why exactly we are seeing currently the GST 2.0 transformation. So as I mentioned, government is planning to lower the tax rate in the GST front to lower the tax burden on the common people and ease the working capital of businesses. So the streamlining of the slabs will correct the inverted duty structure where the tax rate on the output supply is lower than the tax rate on the inputs. So basically, companies are facing a higher working capital due to the due to the constrained input tax credits, as they were not able to claim it as fast as possible, due to which they were facing working capital constraints. So through this GST 2.0 transformation, we will see that working capital to be freed and which should benefit the company. Furthermore, the government has lowered the tax slab rate structure from the previous four structure of 5, 12, 18, and 28% to 5 and 18%, along with a same tax rate of 40%. So this implementation of the new GST will take place on September 22nd, which is the first day of Navratri, and this will be done for most of the service goods and services. However, cigarettes and other tobacco products will see this hike as and when the government discloses it. So GST on health clubs, salons, fitness centers, gyms, and yoga will attract a GST rate of 5%, which is lower than the current of 18%, whereas spectacle and goggles for correcting vision will see a GST of 5% compared to 18%. However, goggles, other types of goggles will continue to see the 18% of tax rate. Furthermore, hotel accommodation services, where the value of supply is up to 7,500 per day, will be taxed at 5% from the previous of 18%. So this is continuing to in line with the government strategy to increase the consumption in the middle class sector as a whole. So if you look at this one page here, which was I would say delivered by the government on the internet, and we have seen this circulating over the internet over the last few days. So in this, we can see each and every item that has been seeing the lower GST rates. So if you look at the daily essential items, they are looking at 5% GST, whereas healthcare sector is looking at nearly to 5%, especially insurance. Health and life insurance is seeing nil tax rate, whereas the other health sector items such as thermometers, medical equipment will look at 5% GST. Furthermore, apart from this, cancer-related drugs will see a nil GST. So this is a very positive update in the healthcare sector as well. Furthermore, on the affordable section, education, I would say government is lowering, I would say removing the GSTs for notebooks, pencils, exercise books, and other educational items in order to increase the boost the education sector as a whole in India. Furthermore, this is one of the surprise part in the GST front, as farmers and agricultural sector is also seeing an uplift, as this was not mentioned in the Prime Minister Modi's speech that happened on 15th of August. However, this is a very positive update for farmers and agriculture, as tractors, tires, and parts will look at a 5% GST. Furthermore, other agricultural products will see 5% GST, such as fertilizers, pesticides, irrigation systems, and automobile sector will look at 18% GST compared to previous 28%. However, vehicles, that is four-wheeler vehicles will see GST of 40% for cars that have an engine more than 1200 cc, and two-wheelers with engines capacity of 350 cc and above will look at a 40% of GST rates. On the electronic appliances front, the GST will be lower from 28% to 18%. So the impact of this GST rate cuts. So as I mentioned, the government is focusing on boosting the consumption. So the interest rate cuts in calendar year 2025, then the income tax slab rate change, and this increased liquidity in the Indian markets. And this current GST rate cut is in line with the government strategy to boost the consumption, especially in this fiscal. So in this fiscal, the government has kept aside the infrastructure part and is primarily focusing on the consumption as a whole sector in India. So the absence of this negative surprises in this recent GST rate cut reaffirms that policymakers are maintaining their stance on reviving the consumption. So the simpler rate structure will strengthen the consumption, support SME businesses, and help partially offset some of the global challenges that are related to the tariffs. Furthermore, the government has also mentioned that the rate rationalization is expected to result in a revenue loss of 48,000 crore. However, the increased consumption should somewhat offset this. And furthermore, today SBI also released a report related to this revenue loss, and they are estimating a total revenue loss of close to 3,700 crore, which is very less compared to the government's estimates. So overall, this is a very positive update in terms of revenue loss as well as the overall GST rate rationalization government stance. Okay, so the positive sectors, I have jotted down here some of the stocks as well and negatives for the certain sectors. So you can go through it, so it will be easy to understand. I will just read the names out loud. So the sectors include automobiles, cement, consumer durables, consumer staples, hotels, man-made fibers, retail apparel, retail footwear, retail daily essentials. Insurance as a overall insurance as a whole should be positive, given more people will now be able to afford insurance, as some of the rates will be lowered, given the GST is now zero on most of the life and health insurance. On the negative side, as I mentioned, the 350cc and above vehicles will see rate hikes. Eicher Motors in the two-wheeler segment should see somewhat impact from this, and retail apparel about 2,500 plus value should see negatives. This company, Raymond at Vedant Fashion, we sell apparels above this range. So I guess I have mentioned all the points in this video and covered all of your doubts related to this video. If anyone has any questions regarding this video, you can comment it down below so that we can reply it as soon as possible. Furthermore, if you do like this video, do share and like, subscribe our GEPL Capital's YouTube channel in order to get updated regarding all the videos and all the upcoming technical analysis as well. So thank you everyone for watching this video.